Welcome to the Lazy Money Machine, where we show you the easy, no-nonsense way to financial and time freedom.
Welcome to another fantastic version. This is great. Welcome to another fantastic podcast of Lazy Money Machine. I'm here with my friend Eric, and we have a lot of topics and a lot of ideas, and we need to get out of your chest, and hopefully you can get some amazing value out of it. How are you today, Eric?
Very, very well. Thanks, David. It's a beautiful day here in Indonesia.
Oh, really? It's a shitty day here in Auckland, to be perfectly honest. It's rainy, it's grey, and it's a bit chilly. It's a bit cold, and we're getting to our spring, and our spring over here is there. And you know what? Actually, let's start on this one. I know that the topic was going to be something slightly different, but what about we talk about the weather? And I don't mean it the usual way. I mean, why are people so dependent on outside sources to be fucking happy?
Yeah.
I think it's a major one. You know that I think that there is a big saying out there that it's the sons out there let the peasants rejoice, and that's a reality. It's the simple people let things that happen to them dictate how they feel, and that for me is a major no-no. You create your own state. You create your own happiness. If you let people or other things outside your control create that happiness, that's when you're in deep trouble. That's what property, and that's a topic that we wanted to cover today, is why property is so good for the lazy way to create that lifestyle and that happiness. Well, what is not right, in my view, anyways, in my book, is to let all the sources, all the shit, all the chatter, all the white noise, essentially, dictate how you should be feeling. And that pisses me off. It actually pisses me off when people feel that they can only be happy when it's sunny and beautiful outside. I absolutely love shitty days like this. There are the days that I can do the things that I really love doing, like reading, learning, listening to music, doing all those things that sometimes I actually don't get enough time to do it. And I'm really lucky that I live in a place where there is plenty of sunshine and outdoors time, and I can get to do all those activities. So I appreciate the downtime that this kind of situation or weather pattern gives you. How do you feel about that? I know this is not the topic I wanted to talk about, but hey, let's start talking about the weather.
Yeah, well, weather is only one of the aspects that can influence people, and especially in countries with seasons like the UK or Holland, or people are always talking about the weather because, you know, it's sort of, they wake up and they look outside the window, and that has to determine how they feel. If it rains, they feel, you know, bad. If the sun is out, they feel great. And I think it's just giving into external circumstances on how you feel on the inside. And I think to counter that, it's really important that you create some form of morning routine whereby you do not grab your social media right away, and you do not look outside the window and see if it's sunny to see how you're going to feel the same day, right? So weather is only one thing, but it's also the opinion of other people. It's the news. It's all these external factors that people let determine how they feel. Now, in my situation, I love the sun. I don't mind the seasons as well. I don't mind being in Europe and being in rainy weather or cold weather. But to me, I mean, for me, it's like almost a whole year long, I walk outside my door and I step into the sunshine. And I do have to say that it's a really cool and nice feeling. And that's also the thing that it allows me to do that, because I mean, if you are free of where you want to live, you can choose to live in a place where the sun is out. And a lot of people that have this lifestyle, they choose a place where it's relatively more often nice weather than bad weather, because we have the freedom to choose. You know, if you like the sun, okay, then go and live in a place where the sun is out. So those are the two things that I see. I think it's bad to let yourself be influenced by a lot of these outside factors. And it's also really important to start your day with the right intention, with how you envision this day going, and that makes a lot of things go away that can influence you.
Well, I think that your weather, instead of being cool and nice, is kind of warm and nice, isn't it? But yeah, you just said cool and nice, and I just couldn't stop thinking about it and smiling inside. You said something though that's really true. And I think that we need to smash, because I did sound like a bit of a douchebag when I said you create your own thing and state of mind and everything else. And I think that it's a bit of a douchebag because it's in my new book, I'm creating someone, and it's call him douche, because it is a bit of the typical motivational speaker, whether even if you feel blue, if you feel upset, if you feel angry, just create your own state of change. Do whatever the fuck you want to do. Think about, no, you cannot think yourself into something. You have to let emotions run as well. I mean, we're emotional beings. That's what separates us from a lot of different animals. And the reality is that if you feel like shit, that there is something that tells you to change. It's giving you another signal. But what I mean by this, it's very different. It's just things that don't really influence or shouldn't influence your life, and you let them influence your life. There are things that influence your life, that's for sure. For example, all these COVID lockdowns are influencing your life. And if you take it for what it is, then obviously you are letting it do that to you. The weather, it's not influencing your life, and unless there is some kind of massive hurricane or some kind that could potentially influence your investments, your specific financial situation. So what I mean by that is that you just have to be chilled about the things that are not important and actually enjoy parts of it, because not everything is negative, not everything is positive. It's not black and white. There is always a big shade of gray, and I'm enjoying more and more living on that gray area, where I don't judge as much, where I don't think that I'm right all the time. Quite the opposite. I'm just in that kind of fluffy, flowy area where things change, and the more that I'm in there, the more that I enjoy it. Where the situation doesn't dictate or whatever is happening doesn't affect me as much at all. And I am guilty of having been very passionate on those levels, maybe because I'm Spanish. And, it's even like watching a football game. Spain lost against Ukraine the other day, which fucking pissed me off. And that's the time that I let myself get passionate about things and let out all that kind of emotional garbage out. But if I have a business situation where things don't work, and there was, again, another business situation this week, which didn't go my way, the way that I thought it was going to go, it didn't affect me at all. I almost felt unempathetic to the situation, almost completely cold and calculating, which is good, because then I dealt with it in a hell of a lot of a better way than if I had gone into a passionate response. And I think that comes with age, it comes with philosophy, it comes with thinking, which is another topic that I really want to talk about. It's just the lack of thinking in today's society, but we'll talk about that later on. But it's just getting to know that situation and how you can do better without having to take it in a passionate way. In terms of investments, it is essential to do it that way. And in my view, that's why property as well is one of the best investments for the average person, because you do not really feel that passionate about it. A business is a bit different. I've opened different businesses. I've bought several businesses, sold businesses, created multi-million-dollar businesses, and they become a bit like a baby. You work on them, you nurture them, you shape them, you take them to that beautiful space, and then they do great or they die. And it's painful because you feel that attachment. You've created a life form, essentially. With shares, again, the same thing, but not really, because with shares, commodities, when you're investing on something that's not really tangible, it becomes more of a game. So you get that kind of casino feel where you're in all the time, you're hot or cold. And you get that feeling, the frustration of desperation, of happiness and elation at the same time when things go well. While property is kind of the coldest, the easiest one to manage your emotions with. And that's why I think people usually do much better on property, because they don't automatically do a knee-jerk reaction. So if property prices go down 5-10%, they don't necessarily sell right away. It's usually not that good because it's a very liquid proposition anyways. But it's just because of their mindset, because they are okay with it. While if you were doing the same thing on other business ventures or investments, you'd probably be more likely to get out of it. So it's all about the way that we think.
Is maybe for businesses, is it also true that you might be more attached to it because there's more direct employees involved. Because when you build a business, usually you have a team, you have people involved. At least for me, it's a lot harder to cut a business investment or a business activity, because I know that the team that I have hired need to go and find another job, right? I mean, I've been in that situation. It was really, really hard for me. So I get, I love people, and I get really attached to people that work with me and work for me. So for me, a business in that sense is always really hard, because sometimes you take decisions based on the fact that you want to keep people employed, not based on the fact that the business needs something else. That's one thing. Also, the other thing is for me...
Oh, you're 100% right. Before you go on to the next thing, I actually had a phone call from one of my investors, and he's become a really great friend in Australia. He's running a solar company, doing it in a completely different way. Really cool dude, young guy, super entrepreneurial, really. And obviously during COVID, with everything changing the way that it's changed, he realized that he was just employing people for the sake of employing people. First of all, it was a bit of an ego thing, because he was employing really smart people to try and take the thing. But he realized during COVID, when he had to pay for all those salaries and he couldn't because the business wasn't flowing, that he could have actually done the same thing with about 30% of the employees. So he had to let people go, which he didn't enjoy. I don't think anyone will ever enjoy that. But it makes you realize just how non-dependent on people businesses can be, and how it can become and affect the way that you make decisions, usually in a very negative way, because of the emotional charge. And anyone that feels that business owners enjoy firing people has never run a freaking business. I have not met one single business owners that has enjoyed that process. It's a horrible, horrible thing, gut-wrenching. When you have to fire someone, you have to let them go. It feels like shit. It takes away from your sleep. It takes away from your existence, from your soul, from your energy. So it's only people that have been employed all the time that think that business owners are assholes and they enjoy this part. No one that I know enjoys that whatsoever. So I just needed to do that, because it's just, I just had that phone call, and it was a great phone call with Alan. He's a fantastic investor. But what was the second thing, mate?
Good question. What was the second thing? Going back to property. I mean, property is really, really a numbers game. It's really a numbers business in the end. And maybe the first few properties you buy, you like, the process of buying them and refurbishing them and being proud of yourself on the job you've done. But pretty soon, especially when you buy and sell, you sort of learn, okay, I buy, I sell, right? So these things are flowing through your life. They're not permanent in your life. And therefore, they're just a vehicle to add value and to make money. Even for a rental portfolio, I think, I'm in the middle of a refinancing process for my property portfolio in the UK, and it's a pure numbers game. And we're looking at, okay, do we do the refinance, or the option of selling the portfolio is always there, right? And yes, there are tenants in there, but it's not a really hard decision, because these tenants can be carried over to another investor, and there's all sorts of solutions for that. It's really, it's quite an objective vehicle for adding value and making money, and it's very easy to not be too attached to it. For me as well, especially since if you're doing buying and selling, you're sort of learning to acquire and to let go regularly, which is part of the whole process. And I think that's good, because I think generally you tend to make better and more objective decisions, because it's a relatively clean cut financial consideration, and a lot of people in property are either paid on results, like letting agents or sourcing agents, people that get you deals, or finance brokers. A lot of the professionals that you need, lawyers, are paid based on either results or on the work they do, and they're not fully on your payroll. You can run a property business with no payroll, with nobody on the payroll, and you can hire the right people and let go of the teams that support you if they don't deliver the way you expect it to deliver. It's a very modular, gig-based, very modern millennial style economy, actually, because everybody's paid based on what they deliver and not based on their employment with you.
Yeah. The only thing that could make people more emotional when it comes to that is leverage, because the property gives you that double-edged sword that with very little money you can control a lot of money, and that can be a little bit scary when you start having millions and millions of dollars worth of property. It can feel daunting for people, and I find that to be true. And especially down under, over here there seems to be a reality where most people will never buy more than 3 houses, more than 3 investment houses. And I think a lot of it comes from the fear of going past a number that seems logical. Because once you go past a few mil, a couple of mil, 2, 3 mil, well, that's scary for people. And that leverage concept can create that emotional response of aversion or fight and flight kind of response. And people tend to run away from that fear.
Yeah.
Which I never understood, but it definitely happens.
Yeah. Yeah. I think that's true. And also it comes with education. So a lot of property investors start it as a hobby, or they buy 1 or 2 more properties besides their home. And then at some point they go, ooh, now I'm borrowing so much money, right? The idea of owning outright is a very traditional way of looking at property, and it's being instilled by previous generations. It's good to own your own house. It's good to own a place that you live in. And to a certain degree, I agree with that if you can afford it, right? So I own this property where I live outright because leveraging it is very high interest rates. What does it give me? Well, I can afford it because I have the money that I can afford to own this house outright. It gives me the calmness of I don't have to pay this mortgage, right? So if everything goes to shit and I don't make any money, at least I can live somewhere, right? Because as long as I pay the electricity bill. So there are good things about it, but sometimes that holds you back from growing. And especially if you come from, I own my own house and now I buy another one and another one. Ooh, I own 3 houses and, I've got 70, 80% of that borrowed. I need to repay it back. What happens if, right? So that I think holds people back from growing. And that's where I think they need to educate themselves, because only with education and I think with mentoring, I think for me, that's what really pushed me further than what I would normally do, is being with somebody that has a large multi-million-dollar portfolio and just seeing that they're actually super calm amongst that situation, and learning from somebody that has done it before is really, really the key here, I think, to get over the traditional model. Oh, I'll buy another property and another property. And I see that in some of my friends who are investing in property, they are buying very slow. So they use their salary. Okay, now I have a bit money saved. Now I can take a mortgage. Now I can buy one more, right? And they're not actively looking for other ways to finance or to raise money or to do deals. And that sort of keeps them in this quite limited growth on property. While if you are with somebody that has done a lot more deals or a lot more portfolio, then you find out actually it's the same. It's just times 10 or times 20 or times 100. And I think that's really useful. So for that, if you're in that situation and you're listening to this, it's time to get a mentor. It's time to find somebody that has done bigger deals, has done more work. Because if you already like property and you're already buying 1 or 2 more houses, why not buy 10 more or 20 or 30 more houses, right? That it's doable. It's definitely doable.
It is really a mindset thing. It really comes down to that. And going back to the point that I was making before, where your situation doesn't or shouldn't dictate the way that you feel about yourself or your life. When I got started with no money. I talked about it on the first podcast that we did. I used crazy things like credit cards and stuff because I had no other options. So now I can look back at it and say I was actually pretty lucky that I had nothing to lose and I could do anything, take much bigger risks, and go with it. If I go back to that situation, most people would say, well, that's not a positive thing to start with no money whatsoever, actually to start in debt. But now looking at it, it seems like a positive thing. Most of the clients that I work with, that I've taught, they are all frustrated and a bit held back, I would say, more than frustrated, because they have money, because they have stuff to lose. When you have something that you can perceive that you can lose, that's when you will be less likely to take action. That is holding you back. It creates a shift of your mindset. Your mind especially starts creating an association between your stuff, your assets, and who you are, what you have, but that could be your money, your properties, anything else, and losing them essentially takes away from who you are as a person. And people create a massive fear of losing who they feel that they are as a person, losing a part of their ego. And they will do anything to preserve that part of themselves. And it stops them from moving forward. So what you could perceive as a negative thing, starting with less money, probably in 10 years' time, if you are serious about this, you will perceive it as a very positive thing, because it's going to completely take away any kind of wall separating you or stopping you from reaching more things, from having that fear that I see a lot in the older population that have more houses, more money that they could potentially feel like they could lose.
Right. So you've also trained people, right? So you've done, you have a training company, you are mentoring people. What is the key thing to switch people's mindset? What do you do to switch their mindset? Okay,
full disclosure here. I haven't coached or mentored anyone in years. It's just... Okay.
But I mean, I know you did, honestly. Right? You had correct, a business where
correct.
That was happening a lot, right?
Definitely, and that's really what I focused on. It was the actual mindset part of it, to just switch them into gear. There is a reason why I haven't done it for years. It took a lot of my energy out, because the way that I got people out of that funk is to be fairly aggressive. So I would go into an emotional response and just challenge the shit out of them. Literally, just rock their whys, their reasons, their bullshit, everything that they were calling as a potential excuse. I would point it out, and I would go so freaking deep that it would hurt people. But only from that pain can growth happen, and it is a process that takes time, and it is really confronting, having someone that's going to show you. To confront that reality that you've created in your head that's stopping you from realizing the things that you could potentially do. And it is not fun for anyone, not for you as a mentor, not for them as clients. And very, very, very few mentors out there have the capacity, the skill, and the balls to actually do this. Because I started doing it very early on, and I still push my guys to do the same thing. So that means that if the first few hours of our mentorship program, people don't react well, we just give them a refund and just move on. It's just not worth it, because we want to know that when you are faced with that level of confrontation, of putting the reality on the table, you're going to take the right choice. You're going to jump on it and just face it and become the person that you want to become. When you come to someone like me, you expect change. You expect something to be transformed. You come here because you had a problem. Well, let's fucking get that problem out there onto the open. Let's bear it. Let's look at it naked. Let's see what the real problem looks like. Let's see whether that was actually even the problem or not. Usually it isn't. It's something a lot deeper or something completely different. And then let's target the shit out of that so that you can move on to the next level. For most people, I would say that there is two major things that hold them back. One of them is the fear of feeling that they're not enough. Mm-hmm. That can take all kinds of shapes, from I'm too old, I'm too dumb, I'm too whatever it is, whatever story that's the case. So I'm not enough, and I'm not worthy. It tends to be the two big things that stop people. I don't deserve this. Why me? And then you come up with those kind of moral compass obligations and nonsense that you shouldn't you shouldn't be achieving what people do, and that creates self-sabotaging in different ways. So those two things seem to be at the core of most problems that I have found anyways on my vast experience on the world of mentoring and coaching when it comes to property business and shares.
Yeah, I can totally understand that. But in doing that, right, in those years that you've been doing that, I suspect that you've learned a lot about people, right? So you can also really see, and the people that came to you were there to build their wealth through property, right? Because you ran a property training business. So even having to go through all this pain and having to, shake people out of their limiting beliefs and, show them that this is the right vehicle. After you were done with that, would they stick with property, or do many of them then switch to something else? Is it too hard? Is it too difficult? Is it too complicated? In your experience, once you get them over that hurdle, that okay, I feel worthy. I want to make more money. I want to be wealthy. Out of the people that you've trained, are many of them staying with property, or also some of them, not pursuing it or not staying with it?
That's a fairly complicated question, but a bloody good one. So the first thing that you need to understand is that we're very different people. We wanted to make property the main core of revenue. I would say 80% of the people that we work with, and that's been thousands over the last 10 years just on Wealth Mentor. I would say, well over 80%, they just want to do this as a part-time thing to take care of their financial future and present anyways when it comes to cash flow. But they don't want it to make it the sole thing. So sticking to property as, doing the main thing being property, it didn't even apply to them from day one. That was not the end goal. They wanted to have the freedom to choose whether they want to keep working or not. Most of the people that we have actually enjoy what they do. They have some level of passion, or they enjoy doing something else, so they just wanted to keep doing that something else while property takes care of those needs. Then there is the people that are dreamers, right? The ones that don't have the guts, and you push them and they still just push away because they find something else. They just want the silver bullets, and you get a few of those ones. So I would say that's a good 5 to 10% of everyone that we teach. And they'll probably buy maybe 1-2 houses, and then they just see something else that they feel is going to make them rich quicker. They tend to be broke, and they'll always be broke. There's very little you can do until they can, and it's very hard to teach those people that the way that they're thinking is what's actually going to hurt them later on. And then you'll have a very small percentage, and again, I would say it's closer to around the 5-10% that want to make property full time and actually do it. It's not a very common thing, quite the opposite. But when they do it extremely well, because, like you said, they have given up everything that they held comfortable. Taking on a mentor, coach, invested money, leverage the shit out of it, going and doing things that other people were not prepared to do. Well, those people are unstoppable. Once you get into that situation, they tend to get even more education, do better things, look at businesses as well. So they tend to mix and match, and they come back. They come to all our events. They become testimonials, become friends. And it is a very small percentage, because the reality is that the vast majority never even wanted that. It's not the product that we sell. We sell a financial system that can help them live a better life, but not so that it becomes their main center of income, even if it does pretty quickly anyways. Even with 2-3 houses, the amount of money that people make on $1 million, maybe $2 million worth of property is tremendous. And it will beat definitely the average salary around here, which at the moment it's about $58,000, which is ridiculous, really.
So this brings me to an interesting point. Like, the main topic of today is, why we choose property over other investment vehicles. I want to talk a little bit about the other investment vehicles later, but I also want to talk about a solution for people that don't want to do this full time. And this is where this is getting very interesting. What I want to talk about is that sometimes people that are interested in property but don't want to spend the time or the energy, they do it half-heartedly, right? So maybe they come to you, they do 1 or 2 courses, and then they begin and they buy 1 or 2. But there is actually two much better options for them, which I want to discuss. One is something that you're working on very hard, which I know, which is property funds, right? So you can go to people that create funds whereby you can invest usually a smaller amount of money. It's you don't need to buy one property. You can buy a share in a fund of properties. And I want you to explain a bit more about that because you're really good at that. And these can be very flexible, so you can be in and out with your money. You can make very good returns on it, but you have a company and a financial oversight body basically securing your investments there. Somebody else is doing the work for you, and obviously your returns are lower, but they're still very good, and you can still be part of property as one of your investment vehicles. That's one thing. And the other thing that I want to point out is that you can find people that are in the property business to invest with. And instead of doing it yourself, you could become like an investor, angel investor. You can put your money with people that know what they're doing. And usually they will have different ways of allowing you to invest. That can be short term. That can be for one deal. It can be secured against some of the properties that, for instance, you and I are investing. So if you love property and you feel like you want to do something with property, but you don't have the time, like David and I have done, to invest in ourselves to really understand this thing, you can choose to find somebody in your circles who is doing this, who you trust, who has a track record to invest with. And the returns can be really, really good for that. And it's probably way more secure than starting to do your own deals because you're letting somebody who knows what they're doing actually doing the deals for you. So maybe let's look at that, right? So the people that sort of drop off the side of becoming full-time property investors, so either the dreamers or the part-timers, what are the options that we could offer people like that, David?
Okay, so you did bring a couple of the really good simple options, funds or syndications, and then becoming an angel investor essentially, or private venture capitalist, whichever way that you want to call it. So when it comes to opening a property fund, they have been done for a long time. Traditionally, they tend to be commercial,
yes.
And the bigger exponents of them are the REITs, rights, which are traded on the stock market. So you can literally just buy shares of those large commercial companies that hold commercial properties throughout the world. So there is a lot of really good rights out there that you could potentially invest into. Then you can go a lot smaller when it comes to those funds. Property investment funds. You can do commercial, you can do residential. And essentially in those situations, you will get to buy a part of the company that holds the funds. So you get a shareholding on that tends to deliver, if it's a pretty reasonable one, a good dividend in the terms of the yield that the property produced. So in the stuff that we do, we tend to give anything between 6 and 8%, depending on the mix of properties that we purchase. So 6 to 8% paid on an annual basis is your dividend of holding the stock on the company that owns that trust or that fund of properties. When they tend to have a maturity rate, so or a maturity year. We usually do anything between 7 and 10 years. So at the end of the 7 or 10 years, we will either sell the portfolio, the fund, and then just give you the capital growth as per your shareholding in a proportional level, or we'll have an option and potentially buy the portfolio ourselves, or offer shareholders the opportunity of continuing that partnership if it's working well. When you look at a low interest rate investment or time that we have here with very low mortgage rates, getting a 7% or 8% per annum, it's pretty good money for you to do nothing. So that's not necessarily a bad deal in itself. Plus, if you're actually investing with the right people, you know that you've already bought into something that has equity anyways, and that has the likelihood of getting some more growth. So that is the appeal of a fund. Syndications work in a very similar way. You tend to have a specific parts of the component in the syndication. You need to have a different secretary that runs it. It needs to be structured the right legal way, but they're very similar in concept, and that is the key thing, is just get the concept. So essentially, instead of investing on a property, you're investing in a group of properties purchased by someone good that understands the market and has done the homework to know that those properties are likely to grow, while they already may have some growth built in on it, and they are giving you enough cash flow to make you happy and to make that investment worth your while, even if shit happens, because we never know what's going to happen in the future with properties. Then you did open the other alternative of working as an angel investor or a private venture capitalist, which I do a lot of myself. Now, there are different ways of doing it. Obviously, when I do this, I tend to do it on things that I know about. So I get offered a lot of different opportunities and different business ventures that I can invest into. For example, I have a really good friend of mine that offered me to invest in a cool business that it looked really awesome. It was an app business. He's actually done really well. So I've lost the opportunity. I said no to it, just upfront on the story. Because I didn't understand it. It was an app that essentially you flip a coin, yes or no, or head and tails, and depending on that, it's a casino essentially. And I couldn't believe that people would love that shit. It seems so weird and foreign to me. But he secured a ridiculous amount of money on investment, and it's an app that's doing really well and it's doing all the right things.
Yep.
But I cannot invest in something that I don't understand. So I only invest on something that I understand, and more importantly than that, on people that I believe in. So when I do this, it's not just for a 8, 9, 10, 20% return on my money. I don't look at it like that. I need to have proper skin in the game. So I need to be a majority, or at least close to it. Anything between 50 to 60% is the normal of the profits of the enterprise. So if I'm lending that money, that's what I need. And I need the other party as well to have some skin in the game. If there is no skin in the game, there is no pain. And if there is no pain, there tends to be no urgency, and things don't usually go well. So that's the way that I do angel investing. I charge an interest rate for my money, regardless of whether the deal makes money or not. So I'll be charging a set of, usually it tends to be a floating rate of Westpac or ANZ, depending on who it is that I'm dealing with, and then a percentage of the profits that are made at the end of the deal. When I'm working with angel investors myself, and I'm actually using someone else's money, I tend to offer a very similar situation, because I work in the concept of fairness and something that's going to be worth their while. So if I'm investing with someone and I get 3-4 mil, and I'm giving them a good chunky return, are they more likely to give me more money next? The answer is yes. If I give them less to screw them over just for the one deal, well, that's going to be my only deal. I don't particularly like to set up a business and a relationship just to burn it within a few months. It just doesn't make sense to me. So if I'm going to set something up, I want to make it as profitable as possible for them, while it's still profitable as well for me. So again, I will do something very similar. I'll offer them a coupon, an interest rate for the money. That, again, tends to be something around the floating rate that gets capitalized and paid at the end of the investment. I will charge what I call a management fee. So for all the money, including actually the purchase price and so forth, there will be a percentage that I charge as a project manager. So once again, I'm also being paid for my time and expertise on this business concept. And then we will split the profits depending on how much money and what it is and the time. It could be anything from 30-70 to 40-60. I haven't done 50-50s in a while, so that's obviously the 70 or 60 for me, and 30-40 for them, and that tends to be fair, because my Buying rules are so high, and I usually achieve what I expect to achieve. So I will not touch anything under 30% annualized return on investment. So that means that for anyone that lends me a fair chunk of money, they're going to be getting a fair chunk of money back, even if it's only 30% of the profits that I create plus the interest rate that I've already guaranteed them. So that's the way that I work with those two forms of investing, and people, regardless of the situation, can choose one or the other. I still have to answer an email. It wasn't an email, it was a message on social media from someone that came to one of my events. She was looking at a few of their posts, latest posts that I put there, the new property deals that I'm doing and renovations and stuff, and she wants to get started, but she's not a resident of New Zealand. Because of that situation, we have actually banned foreigners from buying properties in New Zealand. The only people that can buy properties in New Zealand are Kiwis, Australians, Singaporeans. Anyone else cannot buy. They can only buy, they can only own a company that owns 25% of that property. So the only way that she could get started, and that's what I need to reply to her, is to go into some kind of syndication where she owns less than 25% of that business. Therefore, she doesn't target, or she doesn't get targeted anyways as an overseas investor, and she can still benefit from our great market in a different way. And it's not right or wrong; it's just different.
Yeah. Well, thank you for all that explanation. I actually made some notes, so it's like almost half a course on how to invest in property. But I think what you did is, and that's very good, you elaborated on we encourage many people to get into property. I encourage all my friends to do something in property, and I try to advise them on what's good for them or try to help them with their goals. But I think some of these options are maybe not known to many people, right? Because if you're like in a typical situation where you're in a job, you probably have some idea about how you handle your retirement, and it's usually in a retirement fund, or it's in some sort of balanced investment portfolio, or it's through a bank, or people don't get that much financial advice on how to make their money work best for them. And they think that some of these structures are more risky, right? Because you need to trust one person to go and do it for you. Well, one thing I would say is, don't put all your money with somebody or with one. Don't put all your money with one investor, right? Or with one property developer. But I mean, it's if there's somebody in your circles who you trust, who has a proven track record, like you and I have, I think there's very good reasons to look at this. And I think you could start like you and I mean, it depends a bit on how big developments you are, but sometimes there are minimal amounts that we would take, right? Because it's hassle to set it up, and there's certain minimum amounts. But you could get started with a reasonable amount of money with somebody that knows what they're doing, and see what it does, and then step into a deal that maybe a fund that of 7 to 10 years is not the first thing you do. But I mean, if you are working on a refurbishment or a flip, or buying and selling, you called it something else just now. What was that called? When you buy and sell? Did you have a term for it or not? Okay.
A flip, usually. Yeah, I'm pretty sure it's just flip or a trade.
A trade, yeah.
It's the usual nomenclature that I use.
Yeah. So for that, you could get into a deal with someone for a short period of time. You can see whether they're actually walk the talk and they do what they say, and they can deliver on what they can deliver, and then you can maybe increase. And I think it's worthwhile for everybody to look at that, because it is just so much. It helps people like us because we're always on the lookout for money, but it definitely also helps people realize that you can actually make much better returns on your money if you step a little bit out of the common weather, and find a bit more interesting places to go and do some fun things with your money. And the other thing, like you said, what I always like about this is that if we are responsible to our investors, they really become friends, right? Because they see us as the people that actually do what we say. We make them money, and they come back. I mean, I'm in the situation in Indonesia where I've got a property lined up, I've got an investor lined up. I just don't know when I want to pull the trigger, because I'm still a bit assessing the market on what the situation is going to be, especially next year. And this is an investor that has worked with me in the past. He is happy with his returns. So once people are investing with you and you prove that you can do what you can do, they come back. And that's good for us, but it's also good for the investor because they have a place to put their money where it makes good returns. It is linked to property. There is an underlying asset. And both parties are happy with the deal usually.
Oh, yeah. I mean, I actually think that most people forget in our situation, I mean, that we know a lot of stuff that we take for granted, but most people don't know. We have options. The majority of people don't actually have options out there. So they are looking for options. And when you give them something like this, I mean, the security that they get by getting a mortgage, essentially, a backed investment on bricks and mortar is absolutely fantastic. So they don't get that when they go and invest in the stock exchange. You know, you are basically getting shares, you're getting air, you're getting puff, you're getting nothing. While over here, you're getting security of something that is tangible, that people need, and they get that. And it's a very simple way to explain to someone that even if shit hits a fan, they're still fairly well protected, especially if you have different exit strategies, which as a good investor you should have. But I think I'm guilty of that. You're not the only one that does it. I underestimate just how much I know. And I was actually sending you a couple of messages the other day about this topic.
Yes.
That sometimes we both have to really understand just how much we've done and how much we know. And that for the average person that is so busy, I'm not saying that anyone's stupid in any way, shape, or form. What I'm saying is that because you're so busy doing your day-to-day stuff, family, work, everything else, and trying to keep your life together, you don't have the time to think about this stuff. You don't talk to people about this stuff because there is also that dirty feeling of talking of money, dirty money and greed and stuff. And most people don't talk about money, which I don't get why not. I love talking about money. I love talking about politics. I love talking about religion. I went to see my lawyer, and that was at 10:30 that I got there. It was supposed to just be for the anti-money laundering regulations, even if she knows me and she's known me for over 10 years. Okay. I still have to go and sign the things saying that I'm not a dodgy drug dealer trying to, wash my money. So I go there. We started talking. We started talking about COVID, lockdowns, all that bullshit. And I left there at 12:30. It took me about 3 minutes to sign.
Yeah.
Everything else was just talking,
Yeah.
and that's the reality of of the situation of us as investors. That's what we do.
Okay, I think we've spoken about the reasons why property is so good. Maybe we can discuss a little bit before we close this episode of the podcast, a little bit about why we prefer it over some other investment vehicles. And disclosure here, I have some experience in businesses. I've got bad experiences in investing in financial funds, and I've got really good experience in investing in property. So for me, I'm really in favor of investing my money in property. You have a bit more experience in different investment vehicles, so maybe we can both share our view on why we think this is better than other ways of investing our money.
Yeah. Actually, even before we do that, you did say about diversification. You briefly touched on it. I don't think you went deep enough, and I just want to make sure that we're on the same line there. Well, or that we're not, and then we can have that conversation because it really ties in really well with your question there. The first one is that for me, I always say put all your eggs in one basket. I know that people say diversify. I say bullshit. I think that if you are confident about what you're doing, why the fuck do you want to diversify? It makes no sense, right? So if you are sure about something, you will put everything that you have into that something. If you're not sure, though, that's a different story. Then, diversify the shit out of everything. But if you're sure about something, invest on it heavily, extremely heavily. Now, it comes to why property, right? And why not at the same time? Because the property has good things and bad things. So one of the bad things about property is that it's fairly liquid. So if you need money out of property, it doesn't necessarily sell quickly. And yes, in the markets that I invest, I tend to have a low number of days that properties stay on the market. So I can probably get my funds within 60 days really easily. It's because it takes about 30 to 40 days in order for an average property to sell. Then settlement, let's say that it takes 60 days to get that. That's still a long time. 60 days is not, I have an investment. I can actually move my money there and then. So that's one of the things that I don't like about property. But at the same time, there are so many good things that I like about property. And that's why I have some of my money on shares and commodities, especially now, for example, that I predicted a gold run going on 6 months ago, and I basically smashed the timing. I mean, that's one of the proudest things that I've done in a while. It was just so simple and so easy to see that was definitely happening. And I've done, and the people that have actually listened to me have done really well. So you invest on those things because they're liquid. You can sell them right away. You will get your money back. Not your money back. You will get your money out so that you can put it somewhere else when the opportunity comes in while you're getting a fairly good return. So I like to have some of my money in the stock market and in commodities. There is no question about it. So that's the good thing about them. But at the same time, I know that I've made more money on property than anything else, and I'm going to keep doing that. And the main reason for me is twofold. Is leverage, which we discussed briefly before, and then the knowledge that I've had, because I can make shitty deals look great because I know the market, I know how to analyze it, I know how to create something out of nothing when it comes to property. So those two things together are extremely dangerous, if you want to call it that. I think that's kind of a negative term. It's very positive, quite the opposite. And on the other hand, businesses, they have something that for me is very special, and that is that if you're good at it, they're going to be more profitable and they're going to give you more cash flow than anything else that you can do. So if you want cash flow, the reality is that businesses are the way to go. They're the easiest way to get money in terms of a cash flow on a regular basis. I always make I don't know if you've ever seen me in one of the events talking about my analogy of golf to the asset classes.
No.
So I always say, it's a good one. Can you tee off with a putter?
Very hard. You need to hit really hard.
Well, you can do it is the answer. Yes, you can, but it's going to take you a long freaking time to get to the hole, right?
Yes.
If you're using property to get cash flow, purely to get cash flow, you can do it, but it's going to take you a long time, and you have to buy a very specific type of property. So that means you have to hit it pretty hard, okay? So it's a perfect analogy when it comes to that. If you want to go to the hole and get to the hole quicker from the tee, you're going to use the driver. Or if it's a smaller hole, you'll use something else. But you know what I mean. So essentially, that's what businesses do for you. Businesses will create cash flow quicker and in a much higher extent. And if you want that quickness of getting money, moving money around and everything else, that's what you use the other one, which is shares and the stock. Now, if you are extremely conservative and you want to use things like bonds and savings and the like, look, I'm okay with bonds up to a certain point. Savings, I've always been very against because essentially you're losing money based on inflation basis. So it's not really, it's not an investment. It's just a way of losing money slowly rather than quickly. It's better than not having it, but barely. So you are actually losing money when it comes to saving. And those are our main core ways of being able to invest money, and why I choose property as the core value of what I do, because of the growth that I see, because of the leverage, and because of the potential creativity that most people don't have.
Yep. Gotcha. So my view on that is similar. Actually, you brought up a good point. If I really look at myself, I'm completely undiversified because all my money is in property for the most part. I have a little bit of money left somewhere in some investment funds, but they're minuscule at the moment. And I do agree with you because there's two things why I like to put my money in property. One, I really understand it because I've invested my time and energy in learning it, so I really understand what's going on. Two, it's working for me. So why would I go into an investment class that is managed by somebody else that I don't understand? So that's the other reason. So a friend of mine tried to go into Forex trading. Real story. Very close friend, one of my closest friends here. Went into Forex trading and he said, okay, I'm going to learn this for a year. And he was in between jobs. He decided consciously not to take a new job because he wanted to focus on learning to trade. He took a year and he was really good at it. But it took him a year to really get to the level whereby he feels confident that he can do it. And then in the end, it turned out to just be too hard, too much work, too much time. And he went back to a job. Good choice for him, I think, looking at how he lives and how he enjoys his life now. So going into something like for instance, like Forex trading, if you do that for a living, that's a bloody hard job. That's really hard work. It takes a lot of attention, a lot of energy. So yeah, I do agree that diversifying...
And a very specific type of mindset, man.
Yes.
Like the mindset for that is crazy.
Yes.
Crazy. If you can do that, honestly, you can do anything.
Yeah.
It fucks with your head in a way that I cannot even start to explain. But yes.
Yeah.
Sorry to interrupt.
No, that's all right. So yeah, I agree with you that even if I look at myself, I'm not diversified at all. And if I need to make, so property is my main thing. And I do agree with you as well that if you want to have cash flow and if you want to make money quicker, a business is a very good vehicle. Now, the question then is, business, is it something that you start yourself as a business? Because that's hard work to build a business. Or do you then see it that you would invest with someone else who's running a business? So which choice would you then take if you would want to go into a business?
I'll take a third option.
Okay.
And buy a completely different business. So the strategy that I taught for a while actually was the buy, build, sell businesses.
Okay.
And that's I taught that in Australia, New Zealand, especially in New Zealand, because of our tax system. We have no capital gains tax. So anything that you actually make as a business, you keep it. So essentially, we would target businesses that were struggling, that they were not making a profit. If you know how businesses are valued, they are valued based on essentially three things. It's how much money it makes, the income, and depending on what industry, it could be 2, 3, 4, 5, up to 6, 7 times, right, of the income that it produces, plus the value of the assets of the business, plus any kind of goodwill for anything that may happen or may be special about the business, okay? So you have those three things on how to value a business. So we would target businesses that were not producing much money on the income side, but that were low-skill businesses, like hairdressers, pizza places, so that we could systemize it, make it as profitable as possible, and then get a new valuation and put it on the market. Now, if we buy a business, we're getting it for peanuts, right? And then you can make it, let's say that it's making 100 grams, just for the numbers to be easy, 100,000 per annum, and you're using a multiple of 4, or let's say 3, to actually make it as conservative as possible. You've created something that you bought for literally nothing. You're creating 300 grams, plus, because it's actually been happening lately, you can sell a little bit of the idea of potential for extra growth. So you will easily get 300 to 400 grand. You can get that done in about 18 months. So the capital on it is great while you'll be creating some really good cash flow. So if you are good at fixing businesses, that's the way that you should do it. You should be buying a business, fixing it, and then profiting from it. There is some fantastic books. I don't know if I actually have any of them here, but one of my best friends, and he's a great guy. Actually, this is one of them, but that's Brad Sugars.
Yes.
And that's his real estate one. Great dude.
Actually, living what he says, no bullshit. Okay.
And if you want to build a business, read his books. They're full. Absolutely full of how to fix every part of any business to create more revenue, to create more profits, and to therefore increase its value.
Yeah.
And honestly, you will not get bored reading that stuff. It's absolutely life-changing. So if you are good at that, that's the way that I would do it. I would buy a business that is struggling, but you see the potential to fix it.
Okay. This is not for everybody. I have to admit, right? Because this really requires experience and understanding, right? So I do agree with you. And I think there are, it's a fantastic strategy, but you need to figure out whether you are the right person to do it or partner with somebody who knows how to do it, right? If you want to get into this, that's also a possibility, right? See if anybody in your environment does this, and if they, if they want to take you on board for a deal for a certain percentage, so you can see and learn.
Can we do something? Can we actually just do a whole new podcast now and just talk about business partners?
Yes.
Because, dude, I have so much shit that I want to talk about there.
So let's round up. Let's
crazy.
time out, David. Before we go to another episode, let's stop this one. Let's round this one up, and then I agree with you. Our next episode is going to be about business partners and how to deal with them.
Yes, please, let's do that.
See you next time, guys.
You've been listening to The Lazy Money Machine. Find out more at lazymoneymachine.com.